1 out of every 5 companies that trades in the biotech sector publicly is trading for less value than simply the value of their cash. In other words, the market is placing $0 of value on their actual business. What is going on with biotech?
Yeah, thanks for having me on, Brian. So look, biotech obviously had a great run up in 2020 with COVID, right? So there was much of a halo effect being put onto the sector, was viewed as the solution, to a lot of the problems we were seeing in the market at the time, right? It was seen as a solution to the pandemic, right? Basically, what essentially happened is companies ended up getting funded very, very easily, right? So a lot of the crossover funds that folks talk about in the space were putting money to work, right? It was converting over to public very, very easily, and the market got really, really frothy really, really quickly, right? What we're seeing right now is essentially a reversal of that, and part of the reason why we're seeing that is, a lot of these companies that had been converted from private to public, right? We haven't seen that clinical data pan out yet. We haven't seen the M&A in the space yet, right? And so that, on top of a challenging macro environment with rising interest rates, it's just been difficult for this sector.
Well, and listen, we love ETFs and index funds. They provide, low cost, sort of steady Eddie investing, and we know that they can make you a lot of money over the long term. But that said, Selim, when people dump ETFs, they're going to often dump stocks, even if it's just sort of a synthetic relationship, that are in the ETF, and not all biotechs are created equal. Some are going to have amazing businesses and hopefully defeat all kinds of nasty diseases. Others will go away. Are we kind of dumping out a lot of really good stocks just as a part of a broader market sell-off?
I think that we're going through that process right now, trying to figure out, which stocks are higher quality and deserve investor capital, and which stocks deserve to be weeded out in the process. I mean, right now we have about, the beginning of this year, there were probably about 800 or so biotechs publicly traded, right? If you only go back 3 years ago, we only had about half of that, right? About 400, maybe 500 companies, right? We're going now through that weed out process, right? And so, people often ask, like, are we sort of at the end of this? It doesn't feel like we're at the end of this. I think we're going through that process, right? But at the same time, when you look at, the index that you had mentioned, the XBI, right? It's pretty close to those 2018 levels, right? But we haven't seen those companies get weeded out yet from, quality versus, the lesser quality companies.
Well, that, Selim, I believe, is your job as an analyst, to go through all those companies that you cover and find out the good companies that are being sold off rather unfairly. And you believe, at least based on your ratings and your targets, that Gilead Sciences may be one of those names. How come?
Well, look, Gilead, we like Gilead. We don't love Gilead on a relative basis versus the other large caps that we follow. Gilead is one that actually trades close to our DCF values. It's currently, on a free cash flow yield basis, best in class, on a dividend yield, also somewhere in that ballpark, best in class. And so we like it primarily on a valuation basis. It's hard for me to really pinpoint what that catalyst is going to be to get that stock really going. It's still trading, at around these $60 levels, which is where it was, 5 years ago, right? But we like it on a valuation basis. That's why we're buy rated on it.
Is there a company, quickly, Selim, that you do love? You like Gilead. Do you love anyone?
Look, we tend to love some of the SMID caps that we cover, right? So one that we're very constructive long on right now is Cytokinetics. They have a drug for a cardiovascular disease. The company currently trades for about $3.5 billion market cap. There was this very similar company called Myocardia that was taken out for $13 billion by Bristol Myers Squibb not too long ago. We think the Cytokinetics asset is equal or better than that, and ultimately could get taken out. But the clinical data that we've seen thus far seems to support a valuation that could be much higher than where it's currently trading.